As we approach a potential Biden-Trump rematch in this year's election, it's important to keep tabs on the impact elections have on markets and your investments. According to Reuters, this year, tax and spending policies are among the top sectors investors will be watching. So what impact does it have in November and beyond? This morning, we're joined by Tom Jalix from Fifth Third Bank on Zoom, and in studio, CEO of the Lee Group, Marquez Lee. Gentlemen, thanks a lot for coming by this morning.
Thanks for having us.
So, Tom, let's start with you. What are some of the sectors you're watching as far as major changes during this election year?
Well, I think the thing that we're really paying attention to in an election year is just confidence. Really the uncertainty around new policies, new legislations that might come with new presidential politics come November really leaves business owners and financial markets in a state of uncertainty. Markets and business owners don't like uncertainty. During times of uncertain economic activity, typically you see consumer spending, which is driving 70% of the U.S. economy. When there's uncertain times, people spend less because they're worried about what may or may not happen. And it's kind of the same thing on business owners. Business owners want to know what the climate looks like, and they're far more reticent to spend and invest in their business when there is a bit of uncertainty. I think that's the big thing that we're looking at rather than individual industries or sectors is there's uncertainty going into an election, and that typically drives less investment from business owners and less consumer spending from individuals.
All right, Mark, so we just heard Tom say uncertainty. That's a big word. How do businesses kind of protect themselves? What precautions should they take if that's kind of the outlook that they're looking at?
Well, first of all, I like to tell people you take the long-term outlook. You got to keep in mind, the stock market is run based on headlines. So if there's good news, it goes up. If there's bad news, it goes down. From a business standpoint, what you want to do is to make sure that you still have your plan in action. Have an aggressive plan that says, hey, with good times, I should do this. If there are bad times, I should do Y. So make sure that you're very flexible from a business perspective, and also make sure that you have the resources in place. Because Tom makes a very good point. As a business owner myself, I don't like the uncertainty in the marketplace. I want to be able to invest my resources, whether or not I should hire people, make other change in my resource allocations, is to make sure that we understand the market, which is difficult to do, but make sure that you have a plan in place to certainly address these changes in the marketplace.
And then you have to have your favorite word in your back pocket and be ready to use it, which is pivot, right?
You got to be able to pivot. You got to make sure you be flexible as much as possible. Don't just put a line in the sand, so to speak. You got to make sure you're flexible as well.
All right, Tom, let's go back and get a little bit of a history lesson here. How have past elections influenced the economy? And do you have any predictions kind of for this year?
Yeah, it's a great question. I think what we see and hear is a lot of scare tactics out there, and the reality is that the economy is driven by earnings and cash flows of businesses, the level and direction of interest rates, the level and direction of credits. And if we look back over the last 70 or so years, outside of 3 presidential election years, we've seen robust economic activity and robust financial markets during these election years. The only time that we saw, for example, large cap U.S. stocks as measured by the S&P 500 really go down in an election year was in 1960, 2000, and 2008. And every one of those years was driven by recessions. It really had nothing to do with the uncertainty really about who was going to win an election. The other 15 presidential election years that we've seen, going back again to 1952, we've seen robust, positive stock markets where you've seen pretty major gains. So this notion that you want to really be scared of the financial markets or the economy during an election year because only of the potential political outcomes, we think is just wrong. You want to stick to where's the level and direction of credit, what's the level and direction of interest rates, and where are earnings and cash flows from our companies in the United States going. And again, more often than not, you do see robust economic activity and pretty good stock market returns in election years.
Interesting. Okay, so Mark, let's piggyback off that. What do you recommend for those who are closely watching these economic changes this year and these economic factors?
Yeah, I think you want to continue to look at the strength of the marketplace as well. Continue to look at the overall interest rates out there. Are they continuing to increase? Are they declining? Look at inflation. We know that inflation has come down, but it creeps up periodically. And that's important because as you spend your money, you want to make sure that you're getting cost-effective returns on your investment. And inflation certainly impacts all businesses, whether you're small, medium, or large. And lastly, look at your cash flow. Make sure that you have enough cash in the bank so that you can manage these ups and downs of the marketplace. And Tom, I want to come back over to you if I could very quickly and just ask you from your perspective, what indicators as the economist that you recommend that businesses should look for as we go throughout this election year as well?
I think individual businesses really stick their own knitting. Pay attention to their own order books. If they're seeing any kind of slowdown in prospective orders, I think that might tell something to business owners to maybe get a little bit more cautious if they're seeing a little bit of a slowdown. When we're talking to our clients that are in a variety of different industries, we're really not seeing that. We're seeing robust economic activity, new orders that are actually picking up a little bit of steam here as we sit here, middle of March in 2024. But business owners should really pay attention. They know their customers. They know what their business needs are. And when it's time to play offense, if they're seeing order books increase, play offense. And on the flip side, prospective orders, if we're seeing a little bit of softness or a little bit of slowdown, that would be a kind of a sense that business owners should play a little bit of defense, raise a little cash, maybe pay down a little bit of a debt, and just stay on the cautious side when there's uncertainty out there.
He makes a good point too, Chris. If I could, what he's saying too is stay the course, right? Don't avoid the knee-jerk reactions. So a lot of times, again, obviously you deliver the news every day. We have a lot of headlines, so people react to the headlines. But from a business perspective, make sure that you stay the course.
Yeah, don't necessarily change your business investments just because of a few economic ups and downs.
Absolutely correct.
All right, Tom, I really enjoyed the sports analogies, apropos heading into March Madness, of course. Tom and Mark, thanks a lot for joining us this morning for Risky Business. Appreciated the chat.
All right, thank you.
Thank you.